Hello and welcome back to your South King County real estate update. My name is Sarah Eggleston with Stone Egg Realty at Berkshire Hathaway, and I am back with your local real estate news for the month. Go ahead and jump right on into those slides. So it is December 2025, and this is your South King County real estate update. So this is the last regular episode of the year since it is December, but I do have a bonus episode this month, which is our housing market update, 2025 recap, 2026 predictions, and that'll be on a Monday, December 29th. This is probably my favorite episode of the year. I love getting to go back and watch last year's predictions, see what came true, what didn't. I put a lot of work into this particular episode. So please tune in Monday, December 29th. And I have an upcoming class January 19th and 20th. It is the down payment assistance and first time home buyer class. It is virtual. It's kind of a long class. It's 5 hours, but it does give you credit to use the Washington State Housing Finance Commission down payment assistance programs. So if you are interested in learning more about getting help with your down payment and getting into a home, I highly, highly encourage you to attend this class. The whole point of these programs is to turn great renters into homeowners. So if that's you, please mark the calendar for January 19th and 20th in the evening. And I have a couple other dates that are coming up as well, but we haven't gotten those classes posted quite yet. So stay tuned for that. I will have those dates available very soon. And my winter home buyer and seller guides are available fresh off the presses. There is a selling your home and buying a home booklet. So if you are thinking about making a move in 2026, please reach out to me. I would love to get one of these in your hands. And I also have a first time home buyer guide. So if that's something you're interested in, just let me know how I can get that to you. And into the news, King County condo prices drop as listings linger. The market has been a little brutal for condos recently. They have become a little bit harder to sell, to put it lightly. But right now, if you want to get into a condo, there is a window of opportunity right now. Sales have gone down and prices have gone down in most areas. In November, the median condo sale price in King County fell to 507,880, which is a 10% drop compared to a year ago. And believe me, you don't need to have a loan of that much available to purchase a condo. That's the median price. So there are many more affordable options if you are looking to go for a condo situation. It is the largest year-over-year drop since February 23, when the market cooled off significantly after a pandemic buying frenzy. It is possible a series of low-price condo sales in King County made the data look worse than reality, but it is true that condos are lingering on the market a little bit more, and buyers are more likely to receive concessions or discounts, just have a little more power in negotiating. The active condo listings were up 16% in King County from a year ago. So this shows the chart here for home price. East side dropped pretty significantly on single family home prices. Seattle up just a smidge. But we have in the south end here, Southwest King is ever so slightly above where we were last year, and Southeast King has taken a little bit of a dip. For condos, though, you can see that we're right on par with where we were last year in Seattle. In the South End, prices have dropped a little bit for condos compared to 1 year ago. Condos have always been generally a little bit less desirable to buyers. They usually don't have backyards. They feel like living in an apartment, and they typically have mortgages with slightly higher rates than single family homes. And you're also relying on the condo association to keep the building functioning, keep those systems maintained. And as condos age, like any home, require a little more maintenance. And those costs have gone up significantly. So the dues that are due each month for your condo associations in general have trended up a little bit more than we would have liked. Also, insurance is a little bit harder to find. In 2021, there was a really bad accident in Florida involving a condo, which 98 people died in, which was absolutely devastating. But because of that, insurance companies have really tightened down their insurance policies and made it a lot harder or more expensive to insure a condo. So the cost of living in a condo has risen because of that insurance change. At the same time, remote work has pushed people out of the city where condos are centered, and return to work mandates have been too lackluster to reignite the market. So there are condos that are lingering on the market in those city areas. For home price activity, this is for single family homes. You can see we're just a little bit ahead of where we were last year in King County. Overall, generally pretty flat compared to 1 year ago. But other segments of the market are doing better, maybe not by much. This is all very area specific. In King County, home prices dropped about 1.1% on average to $915,000. Buyers have been avoiding those homes priced too high because they know they have more leverage in this market and more options. So if a home or a condo is overpriced, it is not going to see that buyer traffic that we would hope to see. Even if it's just a smidge overpriced, buyers are really hesitant because they know they can get a better deal elsewhere. New listings in King County are up about 8.2% compared to last year. And despite prime market conditions for buyers to negotiate and receive seller concessions, fewer people are jumping into the market. Still, high mortgage rates are hovering just above 6.2% for a 30-year loan, and that's deterring buyers. And there's been a lot of headlines that have been scary. There's been a lot of layoffs in our region. So people are hesitant to make big decisions like that when they're concerned about whether they're going to have a job next week or whether the stock market is going to do crazy things. If there's a lot of volatility, people are going to hold off on making a purchase. But for those who have jumped into the market, now is the time to receive seller concessions and price discounts. Historically, buying activity tends to pick up in January, while sellers tend to list homes starting closer to the spring, heightening competition. So generally, this Thanksgiving to New Year's time frame is the slowest of the year. There's people out shopping, traveling. It's just a very busy time of year. So a lot of people put their home search on hold during that time. But if you're smart, you won't do that because there are a lot of opportunities right now for buyers to get in before prices increase in the spring of next year. As far as the number of home and condo sales, pretty much down everywhere. Southwest King is just a little bit further ahead than we were last year as far as the number of home sales. And Southwest and Southeast King actually saw more condo sales than they did 1 year ago. So there are some people taking advantage of those price dips. And that brings us to our hyper local breakdown. For new listings in Kent, Renton, Auburn, and Federal Way, we saw fewer in all areas since last month, but more in Kent and Renton by quite a bit. Auburn just up 3% on the number of new listings coming to market from 1 year ago, and Federal Way is down 26.5%. But for the number of homes for sale, so this is new listings plus the homes that have been sitting on the market for a while, Federal Way is exactly flat to where they were a year ago and up in the other three areas. So overall, we are seeing an increase in available inventory and buyers have more options to choose. Pending sales, Kent, Auburn, and Federal Way are up since last year, but Renton is down about 13%. So that's kind of a measure of buyer activity. Median days on market, 34 days in Auburn, so much higher than it was last year. 22 in Renton, 26 in Kent, and 25 in Federal Way. Median sales price, Renton, Auburn, and Federal Way have come down on their median sales price from a year ago, but Kent has actually gone up about 4%. So again, when you're looking at buying a home or if you're selling a home, looking at pricing it, It is very area specific. So know what's going on in your direct neighborhood or in the neighborhood you're thinking about putting an offer in on to get a better judge of what's happening with sales price and sales activity in general. And last time we met, mortgage rates for their weekly average, we had 6.26 and our daily was 6.34%. And if we bring that to today, our weekly average is 6.22. So it is a little bit higher than last week's average, but the rise in mortgage rates comes a day after the Federal Reserve cut its main interest rate for the third time this year and indicated another cut may be ahead in 2026. The Federal Reserve met a couple days ago, and this is the weekly average rate that they're talking about here. That's kind of a Monday, Tuesday to Monday, Tuesday comparison. So these are measuring rates before the Fed met and not really what happened as a result of the Federal Reserve cut. So just keep that in mind. Affordability remains a challenge for aspiring homeowners, especially first-time homebuyers who don't have the equity from an existing home to pull towards a new home purchase. Uncertainty over the economy and job market are also keeping would-be buyers on the sidelines. Economists generally forecast that the average on a 30-year mortgage will remain slightly above 6% next year. While this is unlikely to deliver the sharp relief some buyers are hoping for, rates are expected to be low enough to help counterbalance continued but modest home price growth. For our daily rate for a 30-year fixed mortgage is 6.32. So if we look back to January of last year, so we have almost 2 years on the board here, we've been coming down in general since May, June, and bottomed out in October, the end of October. And then we've kind of been hovering right between this 6.1 to 6.4 range here, just bouncing around in this general range. Anyone who tells you they know what happens next for mortgage rates is lying. This is from Mortgage News Daily earlier today. Friday saw mortgage rates move back up near the highest levels of the week and thus the highest levels of the past 3 months. Thus ends another week where mortgage rates end higher despite a Fed rate cut. We've beaten this horse to death, but here are 2 key reasons the Fed rate cuts don't necessarily result in lower mortgage rates. They are different kinds of rates. So the Fed funds rate is the rate that is for loans of 24 hours or less. So this is the overnight lending rate, where mortgage rates are up to 30 years. So that's a pretty big time difference, and rates can have a vastly different behavior when they apply to loans from vastly different timeframes. And the vastly different levels of timeliness, the Fed only meets to consider rate cuts 8 times a year, whereas mortgage rates move daily, sometimes throughout the day. As such, mortgage rates can get in a position well advanced of the Fed actually cutting rates. All told, this week's Fed announcement had only a small temporary impact on financial markets, and it was completely reversed on Friday. In contrast, the upcoming week actually has significant new market movers. These include the retail sales for October, CPI inflation data for November, and the much anticipated November jobs report, as well as half of the October jobs report. Unlike the Fed rate cut, markets can't accurately predict how these reports will come out. If they're mostly stronger than expected, rates will go up. And if they are weaker than expected, rates should retreat back down. Anyone who tells you that they know what rates will do one way or the other with any degree of certainty is either lying or uneducated. And if they happen to be right, it is surely luck. So a couple quotes here. First one is from Zillow, a report that they issued recently. Affordability for home buyers reached a 3-year high. So that affordability chart involving mortgage rates, home prices, and incomes combined together, that is affordability. And it's reached a 3-year high. So things are a little bit more affordable than they have been in the past 3 years, according to this metric. And from Mark Fleming, the chief economist at First American, affordability should continue to improve. allowing more households to unlock the homeownership door and start the equity building journey that turns a house into a wealth generating asset. And this is from Bankrate. No matter which way the real estate market is leaning, though, buying now means you can start building equity immediately. It also means avoiding the potential for mortgage rate fluctuations later. The senior economist at Realtor.com said the last November there was this much inventory on the market was 2019. This growing inventory puts downward pressure on listing prices, which have been basically stagnant for the past 3 years, and upward pressure on time on market, which has returned to near pre-pandemic levels. And then more from Realtor.com here. Home buyers found more options as the number of actively listed homes rose 15.3% compared to the same time last year. And that is a national stat. The number of homes in the United States that are listed, we have topped the 1 million mark for the sixth consecutive month. To see numbers like this, we did have to go back to pre-pandemic times. 2019 million homes on the market was pretty normal. And since then, we have just had way less inventory than that normal baseline. So we are getting back to our pre-pandemic cycle or pre-pandemic norms in several ways. And this is from Bankrate. During the quieter fall and winter months, when fewer prospective buyers are shopping, home sellers may be more willing to lower their prices or offer concessions to attract those prospective buyers who are still looking. So, as I said, window of opportunity for home buyers here. And just a reminder, I do have those winter buyer and seller guides available, as well as my first time home buyer guide. And that down payment assistance class coming up in January on the 19th and 20th. Don't miss out on that. If that is something you were interested in, this is a fantastic program and you don't have access to it unless you take one of these classes. And more class dates will be announced soon. And lastly, please join me on Monday, December 29th, live on Facebook, or catch it later on YouTube or Instagram or one of those for the 2025 recap 2026 predictions episode. I do put a lot of work and time and care into this episode. I mean, I put a lot of work into all of these shows, but especially this end of year one where we go back and look at what's happened throughout the whole year and what is predicted to happen next year. If you have any questions, please feel free to reach out. My phone number and email address are on the screen there. I would love to have a conversation with you about the market in your area or potentially an area you're looking at moving to, or answer any questions from the show today. If there was anything that was unclear, please let me know. Feel free to reach out and ask questions. All right. Thank you so much for joining me for your South King County real estate update. I will be back on December 29th for your 2025 recap 2026 predictions episode, and then again in January back to our standard show. So I hope you'll join me, and I look forward to seeing you then. Have a good one.